Welcome back, everyone. Thank you so much for being here. Today, we are talking fast food and talking about Wendy's stock. Thomas Hughes is back to report and the latest earnings and where the stock might be headed in 2023. Thomas, Wendy's had a good quarter and gave positive guidance. Why is it not moving higher? The company, by double digits, outperformed McDonald's and most other restaurants. What gives?
Well, you're right. It should be performing better, Lacey, but I think that there are two issues that are holding the stock back right now. One is the valuation and the other is the yield. It trades in line with McDonald's and has a much better yield, but the yield is risky. And that valuation is pretty high, about 25 times earnings, which is about 10 handles better than most S&P 500 companies. As far as the yield, the 2023 earnings won't be sufficient to sustain the dividend by itself. So the company is going to have to rely on its cash reserves and hope that growth will catch up. Growth is expected to catch up. The long-term outlook for the dividend is pretty healthy. Just this coming year is going to be a little bit iffy. The yield is over 4.5% right now. That's almost double what McDonald's is paying. So it is attractive. But if they have to cut it, that'll be bad. So I think we're seeing the risk of that dividend cut in the price action.
So what is Wendy's growth story going forward? Isn't consumer spending supposed to decline in 2023?
Right. Guidance from most of the retailers right now is negative, but the fast food industry seems to be immune. Wendy's is growing via expansions and domestic and international markets. And the international expansion is really where the story is right now. The international segment grew by 17% compared to 7% domestic. And just in general, fast food is kind of hot. There's a big consolidation among the top players. A lot of smaller operators have kind of gone bankrupt, and sad but true because of the pandemic. These larger companies are benefiting from their ongoing expansion plans, but also consolidating the lost business from those lost companies.
All right, so fast food is hot, at least so far in 2023. We've talked about McDonald's in the past. I'll get that link in the description below for our viewers. But Thomas, tell us, what else do we need to know about this sector?
Well, I think Jack in the Box is a good story. It's got a similar growth trajectory to Wendy's, but it's much earlier in the game. So Jack in the Box is growing about the same pace as Wendy's, combined growth, but domestically only. So Jack in the Box is growing at about a double-digit pace right now domestically, and still has that international expansion on the table that could happen in the next couple of years. And this is all coming about because of Darren Harris. He's a new CEO. I think he came into office right when the pandemic struck, but he's been rationalizing the business across the entire footprint, getting like in the past, Jack in the Box corporate stores and Jack in the Box franchise stores didn't really have the same menus, and they didn't have the same advertising. And so he's rationalizing that to get the whole company on the same track. He's growing the company in the U.S. That's accelerating because they've signed a bunch of new deals for new stores. And compared to Wendy's and McDonald's, it's got a pretty good value. It's cheaper than both and yields about the same as McDonald's.
All right, let's check out the charts here. Guys, you do not want to miss this. Thomas is a fantastic technical analyst. No pressure here, Thomas. Let's take a look.
All right, thanks, Lacey. Let's pull them up. All right, we'll start with Wendy's. And you can see Wendy's had the pandemic correction, rebounded, and then it's been trending flat for the last couple of years. And that's because it kind of had a little bit of trouble with its international expansion. We had a correction last year, and now it's rebounding. And the results are really good. And this trend looks like it could continue to go higher. But right now, there is some downward pressure on the price action. And I think that's because of the valuation and the yield. Compare that to Jack in the Box. You know, similarly, had that pandemic correction and rebound. It's had a bit of a tougher time since the pandemic peak. Getting its traction, and had another little correction right here last year. The company decided to buy Del Taco. It's a little bit surprising, but it seems to be working for them right now. But you can see over here, the results produce a much different response from the market. This market is moving strongly higher off of this 150-day moving average. That's a very bullish sign. Right now, there's some resistance up here at this level, but I see Jack in the Box moving up through this and heading on up to these previous highs near the 112 region. Now, I thought I'd show you McDonald's just for kicks. This is the difference between the blue chip leader versus the underdog story, which is Wendy's, and then just a small cap growth story, which is Jack in the Box. And you can see McDonald's, even though its top line has actually shrank over the last year or so due to closing down some restaurants and cutting out the Russian business, but it is still trending much strongly higher, even with that high valuation and the lower yield compared to Wendy's. Bottom line, though, I think that the fast food industry is a pretty good place to be for 2023.
So there you have it. Wendy's is definitely a company to keep an eye on. Its recent performance has been impressive, but there's still some concerns. However, the company's growth story remains intact. All right. Additionally, the fast food sector as a whole seems to be doing well with consolidation among top players and a hot market for investors. If you're interested in learning more about similar companies, like I said, go ahead and check out the description below. We've linked to that McDonald's video and other resources for you. Go ahead and keep an eye on Wendy's. We'll see how things develop in the months ahead. All right, I think that's all we have for today. Make sure you hit the subscribe button on your way out so you'll be notified of our new releases. Thomas, thanks again for joining me, and I'll see you soon.
Thanks, Lacey. Great to be here. See you next time.